Hi, and welcome to the April 2018 Downtown Pittsburgh IBD Meetup presentation. My name is Eric Rossi. I'm the co-organizer of this meetup group, and a link to our meetup group's page is on this first slide here in case you found this video on YouTube and you want to learn more about the meetup group or join the group. So the mission of this group is to educate individual investors about the CAN-SLIM investing strategy. And this presentation is for educational purposes only. I'm not making any recommendations to buy or sell securities. Investing in stocks does carry substantial risk and you can lose your money. I am a non-professional volunteer investor, and Investors Business Daily, IBD, and CAN-SLIM are registered trademarks of Investors Business Daily, Inc. MarketSmith is a registered trademark of MarketSmith, Inc. And Meetup is a registered trademark of Meetup, Inc. So this video assumes that the viewer is familiar with the CAN-SLIM investing strategy, which was developed by William J. O'Neill, the founder of Investors Business Daily. At a minimum, viewers should have read this green book here, How to Make Money in Stocks, before viewing this video. If you haven't read that book, you're certainly welcome to watch, and you should certainly learn something, but it'll make a lot more sense if you've at least been through the book once. And this book is, in my opinion, the best investing book out there, and is a book that should be read over and over again. I've probably read this book like 10 different times now. The topics for this meetup, we'll go through the market dashboard as always. We'll talk about the current market. We'll look at current holdings, so for some example stocks. We'll look at one recent stock, which was PAGS, P-A-G-S, and then we'll conclude. Okay, the market is not good right now. This has been a difficult year. Pretty much since mid-January, it's been a tough year. We've had some pretty decent-sized pullbacks in the market, and certainly more so than anything we saw last year. And the market's been very choppy. It's been very volatile, and it seems like one day it'll gap up above a 50-day moving average, for example, looking like there's going to be some good strength. The next day it'll gap right back down below it. So it's a really difficult market right now to make meaningful progress. And it's okay to still buy stocks, but we need to be very selective and think about taking profits maybe a little sooner than we would normally. I'll talk about that with the PAGS example. But right now, the market is currently, as of this recording, it is correcting roughly 5%, and the last 10% correction ended 4 weeks ago, and we still haven't had a 20% correction in a very, very long time, as you can see. But the market is definitely showing weakness right now, and it's definitely a difficult environment. A lot different than last year. Last year was very forgiving. The current NASDAQ chart pattern it's correcting, and it's hitting resistance at the 50-day moving average, which is a bad sign. And so we get some yellows and some reds here. The Fed activity, the Fed raised interest rates in December, and then again they just did so in March. And there's 3 more interest rate increases expected this year, and then 3 to 4 in 2019. And that should say 2019. So that's red. When interest rates start going up steadily like this, it tends to mean bad things for the market. It doesn't seem to have had a big impact yet, but it might be starting to now. The last bull market started in March 2009 after the financial crisis. We may be transitioning to a bear market right now. It's unclear just yet. The last bear market ended in February 2009, which was a very long time ago. And in terms of market history, this is a very long bull market that we're in. And we're certainly overdue historically for a bear market. And we've had 11 intermediate corrections in the NASDAQ since this bull market has started. So overall, you can see there's a lot of reds and yellows in the market dashboard, just pointing to the fact that the market is very dangerous right now. Okay, so next we're going to look at the market just quickly, just the NASDAQ probably, and then we'll go look at, these are my current holdings just as some examples. 5 stocks that I'm holding right now. And then we'll look at one stock that I sold recently, PAGS. There's some good lessons to learn with this one. And then we'll conclude. So I'm going to switch over to MarketSmith now. Okay, so this is a weekly chart of the NASDAQ, and you can see any correction over like 5%, I pretty much mark on here. And you can see that, I'm not sure what these ones were right here, maybe I just missed marking those, but you can see that since at least November of 2016, we really didn't have any meaningful corrections in the NASDAQ. I mean, the biggest one was probably right here, which was less than 5%. So to start this year, first of all, the NASDAQ got a little overheated here. It started, it was following this nice long kind of uptrend line here for a while, and it started to, the trend line started to accelerate here. You know, if you look at the market, it was generally within this channel, and then it was starting to trade kind of sharply upward here. And you can see after that happened, after we had this little, it's kind of like a little climax move, the market pulled back very severely, and then ever since then it's been just chopping back and forth. And you can see this year we've had two corrections more than 10%, and right now the market is showing, it's looking a little bit like a head and shoulders pattern here, which we can see on the, if you look here, this is the head, this would be the left shoulder, and the right shoulder underneath it. And the market today is hitting resistance as it attempts to rally above the 50-day moving average, which is very negative after this formation. So this doesn't obviously mean that the market's going to go tank from here, but it at the moment does not look very good. And until the market probably gets back above 7,500 and then to new high ground, it's probably going to continue to be a little choppy like this. Because you can see here, we had a gap up here above the 50-day, everything's looking good. 3 days later, we're below it, and then we come down kind of sharply, then we gap up towards it again, hitting resistance at it. So this type of action here is, it's difficult to invest in growth stocks in this type of environment. It's a better environment probably for day traders and swing traders right now. Okay, so let's look at some current stocks. Again, these are just some examples, some things that I'm holding at the moment that so you can see what's going on in the market. FND, Floor and Decor Holdings. This stock is a relatively new issue. It went public about a year ago, and it had formed a base here, formed an IPO base, and then a cup with handle, and didn't do a whole lot out of there. And then it formed another cup with handle here. And you can see that the earnings growth on this, especially for a new issue, is very good, and the sales growth is very good as well. Fund ownership is increasing. The fundamentals here, the IBD ratings here are very good. And the stock has good liquidity as well. It trades on average 750,000 shares a day. So, well, it's decent liquidity, especially for a new issue. And then the annual estimates for earnings growth are good too. So I was watching this. It broke out of this cup with handle back here. It didn't really move very high. So one thing that was a little bit flawed here was this uptrend leading into this base. This uptrend, you know, if we started down here, it's pretty good from 36 to 51. If we count it from this base up to here, then it's not so good. But this was a relatively tight base, and volume dried up here in the handle, you can see. Volume down here was light, which is very, very good. And then as it broke out, volume picked up. So this looked really nice as of right here. And the stock kind of went sideways, and then it had a big up day here, up 8%, and then the next day up 2%. It was almost to the 20% profit goal, which is 58.40 from this buy point. and it didn't quite make it. And in hindsight, I'm wishing I had sold it there and taken my 20% profits, but it didn't quite make it. And I have an alert here at 58.40, and I actually have a limit order with my broker to sell there. So it was still looking okay here up until this day on Wednesday. The market had a bad day this day, and the stock gapped down significantly. It was down about 10% at one point, but it did bounce off the 50-day moving average nicely and in good volume here. And it's slowly moving up back now. This one, I'm thinking it is going to make the profit goal, and I am going to sell this and run. One thing to deal with here is that the earnings report is due next Thursday before the market open. So if you did buy this breakout here like I did, you certainly have enough profit cushion to hold this through the earnings report, and hopefully it'll have a gap up move and make that profit goal. And if it has a gap down, you know, we're up maybe 13% at this point, so you can afford a pretty substantial gap down without losing money, or hopefully not losing any money. But if it were to gap down more than 13%, it would be unlikely to be much more than that. Okay, VNOM, Viper Energy Partners, is next. This stock had a really nice uptrend here. You can see it went from about 15 all the way up to 25 before it formed this base, and it had a lot of tight closes here. Although the tightness here and volume was below average, which is good. These tight closes were below the 10-week moving average, which is a little negative, but you can see that it rallied back through the 10-week moving average here, and then it tried to break out here and failed, and then it had a good solid breakout week here. Going back to the fundamentals, the IBD ratings here are really good. You can see all these numbers are really good. There's not a lot of fund sponsorship with this stock, but it is increasing. Not really sure why that is. The stock is a little bit thin. It only trades about 14 million a day in liquidity, which is a little thin. The annual earnings estimates are decent. You can see quarterly earnings growth has been really good. A lot of triple-digit quarters here. And sales growth has been excellent too, mostly triple digits recently. So this stock had a nice breakout day here, and then it's been moving nicely higher. It went up rather quickly here, so this pullback right here is kind of a normal reaction to this move. The stock went up to about 30 out of here, so it was up maybe 15% from the buy point. So that was a pretty good move in just a couple weeks. So this little pullback here is kind of normal. This stock's reporting earnings after the market close on Tuesday. So certainly, again, at this point, there's enough profit cushion if you bought it here to hold through the earnings report. And this stock has a very, if you look at the earnings reports historically, it has a very low move after reporting earnings. It's never had a big move up or down, really. So this one's pretty low risk to hold through earnings. And hopefully it'll have a gap up move here and make the profit goal. And if it does, then I'm selling it and get moving on. Cactus Inc. This is a new issue that you can see it had a really strong move here into this base. From 19 all the way up to 28 in a short period. And you can see that the earnings growth is really strong, triple digits here, high triple digits, and sales growth is excellent as well. A lot of these ratings here are not populated yet because this is a new issue. This just went public in February. But for a new issue, this is good. And it's trading about 28 million in daily liquidity, which is good. Oil and gas is pretty hot right now. And you can see that the relative strength has been going up nicely here. As the market was coming down here, the stock held up really well. It had a really tight base here after this up move. And unfortunately, it's not doing great since then. It broke out this day and it kind of reversed, and it actually tested the low of the base right here. And I was gonna buy this day, but by the time I got around to placing an order, it was reversing, so I didn't buy it, which turned out to be good because you can see it ended up having a down day a few days later. It was down quite a bit, where it actually undercut the prior low in the base. But this turned out to be a nice shakeout day actually, and now it's going higher. And I'm about even on this stock. It hasn't really done a whole lot. Interestingly, they say the earnings is coming up here. I have to look at that. I didn't see that yesterday when I looked on their website. This just formed a 50-day moving average here, and it's holding above that, and it's holding above the buy points. It's been a few weeks, so it's okay. Volume's light right here as it's been pulling in this week, so it looks okay for now. Nothing to do right now. At home, so this stock had again a nice uptrend here. If we go from this low here down around 20 up to 34, that was a really nice uptrend. If we go from this prior base, it was still a good uptrend. It was more than 20%. And you can see this base mostly formed in below average volume, and then we had some really big volume weeks here, big volume accumulation here, including the breakout week, which makes this a really attractive setup. The ratings here are good except for the group. The group is really weak, so this is kind of a diamond in the rough in this group. But just because the group is weak doesn't mean that we should discount this stock. The annual earnings growth estimates are good. Fund ownership is increasing. Earnings growth has been really good, some triple digits and high double digits. And sales growth has been very, very steady here. This is really nice. So this stock formed this base here, and it had a sloping trend line, early entry that you could have bought it a smidgen early right here. And if you did buy this, you're up maybe a few percent. Hasn't done a whole lot. It's kind of just hanging in there, but there's been nothing, no action yet, nothing to do. The profit goal is far away, and the you can see where my stop losses are down here. So there's nothing to do yet. This one's hanging in there okay. Relative strength line is coming up here, which is nice. And this one doesn't report earnings again for quite a while. Okay, last stock I'm holding right now is Canada Goose Holdings. This again is a relatively new issue. About a year ago it went public. And you can see it formed this cup with handle here, and then it had a really powerful move here. It about doubled in price before having this really wild week right here after this most recent earnings report. And ever since then, volume's been light, but it's kind of hanging in there. And you can see that the A for this year is not good, but for next year is good. The ratings here are all pretty good. Fund ownership's increasing. Earnings growth has been not quite as consistent as you'd like, but it's been good. There's been some high quarters and some acceleration here, and then the last two were pretty consistent. And sales growth has been a little more consistent. Liquidity, this trade's about over 70 million in daily liquidity, which is good. So this stock again had a trend line entry, which I used right here to get in. I only have half a position right now because after buying this, it pulled back right here. It didn't trigger my stop loss, but it didn't go up. I like to buy half of it and then the other half a couple percent higher than that. So it may go on and go. It may head up that way. That's this alert right here actually is to buy the other half of the position. But I'm looking for this right now to break through this 37.50 price and then eventually make a new high here. But for right now, this one's okay. RS line is hanging in there. And this is holding up better than some other stocks. Okay, let's look at PAGs. And this is a stock that I just sold this stock this week. And there's some good lessons to learn on this one. So first, let's go back to this stock broke out of its base the week of 2/16. And I've got the February 12th Investors Business Daily newspaper here. And this is where I first saw this stock, was in the IPO leader section. And if you look here, we look at this, and this has a nice, it has a high composite rating. It has a very high EPS rating for a new issue. This is really high for new issue. And return on equity is pretty good. Annual earnings growth is triple digits, which is great. Average daily volume, this isn't so important because it hasn't been trading that long, but that's good. You can see the liquidity is, let's say 8 million times 28, whatever that comes out to be, 20 million. Last quarter EPS growth was 250%, which is excellent. Sales growth is triple digits. 3 quarters in a row now have averaged 250% earnings growth. Pre-tax margin is good. And the supply-demand rating here, anything over 90 here is really good. And they tell you here, it's a new issue, has an IPO base with a $30 buy point. So that's how you could have seen this stock, and that's where I saw it. If we look at MarketSmith here, you can see, again, very good ratings here for a new issue. The group is not quite as strong as we'd like to be. Annual earnings growth is good. And you can see that earnings growth here is just really strong, and sales growth too. The stock went public. The IPO price was $21.50, which means that way down here somewhere was the IPO price. And this is a big gap up basically on this first day of trade. So that's what makes this a really nice base, is that you have, although you can't see it here, with the IPO price being somewhere down here, this is like your prior uptrend right here, and then it formed this base. And you can see that volume was tapering off as the stock formed the base, which is good. You want to see the stock kind of tightening up on the right side of the base with volume declining. There was a trend line entry you could have used here to get in early right here. I don't remember if I did that or not, but I certainly bought some on this day. And if you bought here, let's just step through this. We'll just step back in time here. So, if you bought it this day, it looks good, right? It's up 1% above the buy point. Let's say you bought half of your position around here, and maybe you bought the other half up in here. So your stop loss would be about 7% below that, 7 to 8% below that. It'd be like down here around 29, let's say. Okay, stock's up again. Nothing to do here. Now, up 8% in a few days, this is a really powerful breakout. And a pullback would not be out of the question after that happening. This was a support day, even though it was a down day. So this is still good. Still nothing to do here. This is looking good. The 10-day, you can see this green line, the 10-day moving average is starting to catch up to the price. And so here, the stock had a little bit of a pullback, and it then moved higher here, formed a new high, and you can see the 10-day moving average caught back up, but it's bouncing off of it, which is good. It doesn't have a 50-day moving average yet because it's a new issue. So at this point, what I do is if the stock is up 10% from my buy point, I will raise my stop loss to a 1% overall gain. So our initial stop loss was down here, 7 to 8% below the buy point. I would now raise it somewhere around here, wherever I bought it at, a 1% gain. So that way this stock's up a good amount, I don't want to take a loss on it. I don't want to take a 1% gain. I'd love to take more than that, but I don't want to take a loss on this, so I set my stop loss at a 1% overall gain, meaning ideally I won't take more than, I won't do worse than break even if the stock is really tanking as it hits this level. And I want to take my profits when this, generally when stocks hit 20% above the buy point. And this stock got close to a 20% profit here, but not quite. And then it started to pull back. Okay, so this is another day here. Let me see, this was the earnings report day actually. And the stock traded down early in the day and then it found support. So as the stock sold off on earnings, a lot of buyers came in, and you look at the spike in volume here, which is great, that people were bidding up this price. And this was a really nice day here. It turned out to be a pocket pivot day. There's actually been a couple here. This, not that one, but maybe not. Maybe this day was a pocket pivot, but this one for sure. You can see volumes heavier than actually any day in the recent several weeks, and you can see the stock's getting close to the 20% profit goal. Okay, why? It's giving me some trouble here. Okay, there we go. Okay, so this day, we've only had the stock for 3 weeks, and if you want to take your profit at 20% from the buy point, then you would do it this day. And maybe you would have done even better than that, depending on where the stock opened. And this was really nice. This was in 3 weeks to take a profit like that. And my experience lately is that stocks make a 20% profit in 3 weeks, roughly, or less. Then it's better to take the profit and run, because if they ran up that quickly, they have a tendency of having sharp pullbacks afterwards. But let's say that you want to hold this stock and see if you can make a longer term gain out of it. Where would you maybe move your stop to right now? Well, one place you can move your stop would be this this low right here. This, there was a recent low right here. Some people call this a swing low. There was a recent low right here that could have also been used as a stop at some point, but we could at this point use this this recent swing low, as our new stop loss. So that would put us around, let's just say 32.50, just below that. So if you missed your chance to take your profits this day, you could take them again this day. You had another chance. If you chose to hold the stock, then you can see here the 10-day moving average is catching up, so maybe this is going to go even higher. Okay, now it broke through the 10-day moving average, a little concerning. And then this day here, you can see if we had been using this stop, we may have gotten stopped out here. And it closed above that level, but it did undercut it just briefly. The fact that it bounced off of there is good. And volume, you can see volume picked up a little bit, which is good. So this pullback was on light volume, and now it's bouncing off of the prior low. So let's see if it keeps going higher. Yeah, it looks like it is. So again, if you didn't take your profits yet, here was another chance to. But let's say you're still holding it, hoping this thing is going to keep going higher. At this point, you could raise your stop now. We were using this low before. This is the most recent one here, around 32.50. So that's around where we had it anyways. So this could still be our stop loss for now. Okay, now the stock had a really good day, gapped up above the almost to a new high, and it's up now more than 26% in about 5 weeks. Okay, the stock has a reversal day here, still up 25%. So if we're still holding this, our stop loss is way down here. There's nothing to do here. Okay, stock bounced off the 10-day moving average. Nothing to do. Nothing to do here. Mostly just heading sideways. Okay, here we've got a big move down. Although volume's light on the day, it's a big move down. It's one of the worst days since the stock has broken out. So this is concerning if you own this, and if you had your stop down here, you know, you still got plenty of room, but a little bit concerning if the stock keeps trading down like this. Okay, now it appears to have its finest support at 35, which is good. Okay, this is the first time now it tested the 50-day moving average, which just formed this recently. And it kind of bounced off it, not quite as strongly as we would like. Usually a really good stock, if it tests the 50-day, it'll bounce off it pretty powerfully. This move is not quite as convincing as you would like to see. But let's just say we're there, let's say we're keeping our stop loss right here for now. Okay, so the stock now moved back up. It's showing support again, or it's showing strength again, which is good. What we can do at this point is we had our stop right here, and now we've had a more recent swing low, which is higher than the prior one. So if we wanted to, we can move our stop loss here now, about 33.50 instead of 32.50. Okay, so let's do that. Let's assume we're keeping our stop right there. Okay, and we step through this. Nothing to do here until this day. And this is the day I sold it. I chose at the time not to take my profits here because this was moving up so nicely, and the stock had probably the best fundamentals in my portfolio. And I thought, oh, I'm going to hold this for longer term gains. And with the market, the way the market is right now, it's not a good idea to do that. It's better to take your profits right now. I mean, you can see there was plenty of time here to take a 20 to 25% profit. There was a lot of time. And instead, you know, I still took maybe a 12% profit on this, but that's pretty disappointing when it was up over 30% at one point. So, and you can look at this, you can see just how quickly, you know, this move is so nice and so steady, and you think, oh, everything's going well, and in one day, look how nasty things can get. And it shows you how quickly stocks can sell off even when they looked strong prior to that. So if you had your stop loss right here, which is where I had mine, you definitely had to sell it this day, way undercut it. And now if you didn't sell early in the day, it did find support, and it did come and close actually just above the stop. So if that were the case, the next day it gapped down, you would have definitely had to sell it here. And if we take this to today, the stock is it's moving up. It's trying to rally. It's rallying to the 50-day on light volume, which is concerning. And maybe hopefully this will go on and form a new base here, because it did have a nice uptrend here, but it's unclear right now. Maybe it'll form a double bottom. This could be forming a double bottom, but it's a little bit funky looking. So I just wanted to go through this example. I thought it was a good example to see if a stock makes a 20% profit in 3 weeks or less, and this did it in 16 days, which is close enough to 3 weeks. I'm gonna take my profits and run from now on, because I've just seen this too many times where stock runs up really quickly, and instead of trying to hold these things, hoping they keep going higher, you know, this happens a lot of time where they tank, and then all those profits are gone in a flash. So I actually did a little study of the top stocks from last year and found that most of them ran up to a 20% profit in like 3 to 12 weeks. And then those turn out to be the really big winners of the year. So the stocks that ran up really quickly to a 20% profit tended to not be big winners. And I'll show you one more here that did the same thing. Actually, I'll show you a couple more. Upland Software. I saw this in IBD this week right here, and bought it on this day. And the stock was reporting earnings a few days later. And since I had just bought it, my profit cushion was like right on the border. I chose to sell it and take my 4%, 5% gain, whatever. And I was disappointed at that because the stock gapped up 11% and it made, you see here, it made a 20% profit in 6 days. Well, if you would have bought this, let's see if you would have held it thinking, no, it's going to make a longer term gain. Well, so far for now, like half your profits are gone. So, why not take, to make 20% in 6 days is phenomenal. Why not just take that money and run and try to find another stock that's setting up like this? One more I'll show you, one more example is SendGrid. And I bought this stock out of this IPO base back here, which it looked pretty bad at first, like it was going to fail. I held it through this. It didn't trigger my stop loss. It was really close, but it didn't. And then the stock had this big day up, 13%, and then the next day it's up, reaches a 23% profit in about 2 weeks after the breakout. And again, I didn't take my profits here because I thought this moved up quickly, it's going to go even higher. And it did, and it is higher. But if you would have, if you did hold it through here, let's say you would have moved your profit or your stop loss up to here, let's say, like just 1% gain, you would have to sell it in here. And taking a 20% gain in 2 weeks is a hell of a lot better than taking a 1% gain after 4 or 5 weeks. So those are just a few examples. A rule you might want to consider playing around with is if a stock makes a 20% profit from the buy point in 3 weeks or less, just take your profits and run. And the stocks that tend to take a longer time to reach their profit goal are the ones that you might want to consider holding for longer term gains. And I'll just show one here from last year. One example of that is Align Technology, which turned out to be a big winner for the year. And this stock formed this cup with handle here, and it took, I believe it took about 12 weeks to reach a 20% profit. Yeah, right here. Right here it did it. 10 weeks to reach a 20% profit. Well, if you fast forward a year from that point, from that cut base right here, look how much of a move this stock made. Okay. Another one is Netflix. Netflix, if you bought this cup with handle down here, which I did, again, this one took a long time to reach a 20% profit. Let's go back in time and find out. You can see these stocks that tend to make these small moves and they trade tightly on a weekly basis, they're not very volatile, they're just steady movers. These are the ones that seem to be worth holding for the long haul, not the ones that run up really quickly. Okay, but you can see here, this stock took, 18 weeks to reach a 20% profit. So these slow movers, these slow steady movers right here, these are the ones that, based on my review of the last year or two, are the ones that you want to think about holding for longer gains. Not the ones like I showed that run up really quickly in a short period. Okay, so that's something you can do your own research on and decide what you want to do. Okay, so that's the end of this video. If you found this on YouTube and you're not a member of the meetup group, you can join the meetup group by following the below link. You do need a free meetup account. And I gotta update this slide. I don't actually distribute these presentations anymore because Meetup doesn't allow posting of these files. But if you do join the Meetup group, you'll be notified when we're having a webinar, which we have quarterly, and you'll be notified when these new videos are available on YouTube. So I'll update this slide to reflect that. There were no member questions from the last month, and if you have a suggestion for a future topic or you have a question, just message me on Meetup, and I answer all my emails there. And if you have something you want me to include in a future video, then I will consider doing that. All right, thank you, and sorry I haven't posted a video in so long, but I'm gonna try to keep on these on a quarterly basis as I tell members of the Meetup group. Thank you. Have a good day.